Good morning and welcome to the Killik & Co market update. As we were filming the video last Friday, there was some breaking news about a worldwide IT outage that was impacting computers running Windows. Microsoft shares initially weakened as Microsoft owns Windows, but it later turned out that a company called CrowdStrike was to blame. CrowdStrike is a cybersecurity company, and it had deployed a faulty software update that impacted 8.5 million Windows machines worldwide. Microsoft shares recovered, but CrowdStrike shares have been hit heavily. CrowdStrike listed in 2019 and it later joined the S&P 500. As you can see here, the shares have fallen more than 30% since CrowdStrike accepted responsibility for the faulty update. The computers that have been impacted have to be rebooted manually, so it will take some time before everything is back up and running normally again. Many businesses have suffered huge disruption, so the question now being asked is what the insurance bills will be. This issue does highlight the risk of any individual company having such a large market share. Here's a breakdown of market share in the endpoint security industry from 2021 to 2022. And you can see CrowdStrike accounted for 17.7% and Microsoft 16.4%. It's thought that CrowdStrike share has since grown to over 20%, but we'll have to see if that declines following this major issue. There has been some wider market weakness for the large cap sector this week, and the fall was arguably started by some disappointing results from Tesla. Reporting season is just beginning, and there's a little bit of apprehension about the technology sector and whether some of these big tech companies will publish results that are good enough to justify their recent share price rises. Tesla was one of the first companies to report, and the results were below expectations. Costs were quite a bit higher than expected, and that really put some pressure on profit margins. Tesla shares were down 12% in after-hours trading. Here's Tesla over the last 3 years. It's been a very difficult time for Tesla investors. The broader technology sector has performed well, but Tesla shares are down nearly 50% from where they were in October 2021. The NASDAQ Composite Index and the S&P 500 both experienced falls after these disappointing results from Tesla. Here they both are in percentage terms over the last year. The NASDAQ is in the pink and the S&P is in the green. It's never pleasant when the market comes down, but at the same time, it did feel as though the market was due a bit of a correction. Until this week, the NASDAQ Composite was up over 30% since last July, and it was becoming more difficult to invest new cash. Some volatility is likely as we move through reporting season, so let's hope this throws up some new opportunities. And finally, while large cap stocks may have dropped recently, the opposite is true of smaller companies. Here's the Russell 2000, which contains US smaller companies over the last 3 years. Just look at that jump in the last couple of weeks. The jump looks even more obvious if we zoom in and just look at the index over the last year. Confidence appears to be returning to the small cap sector as we get closer to the first interest rate cut. We've also seen the discounts narrowing on investment trusts that focus on smaller companies. Some of these investment trusts have been trading on wide discounts since 2021 as smaller companies have been so out of favor, but this now appears to be changing. Aberforth smaller companies and BlackRock smaller companies, both of which focus on UK smaller companies, have had average discounts of over 11% during the last 12 months, but right now, both have discounts of around 7%. JP Morgan US smaller companies has also had an average discount of over 11%, and this has just narrowed to 8.3%. Do give us a call if you'd like to talk about the smaller companies' exposure in your portfolio. Moving on to have a look at next week is a big one for big tech, and we're expecting results out from Microsoft, Meta and Amazon. That's it from us. Enjoy the weekend, and we'll see you next Friday.